The objective of this video is to explain the volume profile, how to use it, what to look for, and overall just the significance of it, right? Now, I want to make this video short, sweet, and concise, and I want to go straight into it so you guys could learn as quickly as possible. And I want to really just, give you guys my textbook definition on it, but also provide you real-time examples with a few ticker symbols, as I usually do on this channel, right? Now, the volume profile is this blue, stuff we see over here, right? Now, of course, I'm using the TD Ameritrade Thinkorswim platform, and this is how I have it set up. Of course, if you're using a different brokerage that offers a volume profile, it may look slightly different, but realistically, this is what you're going to see. We're going to see kind of like this histogram figure where we see lines going horizontal. We see them going further out at certain points, right? Now, my definition, my textbook definition, and I'm going to, of course, explain it, but the volume profile represents trading activity over a time period at specific price levels. Considering the input-defined aggregation period, the volume profile plots a histogram, which is what we see here, showing price distribution, revealing the dominant price values in terms of volume, right? So the wider the histogram row represents like the actual transactions made within the price interval defined by the row's height. So, what we see here is we're looking at a 4-hour chart. And what you're going to notice is when we go from a 4-hour chart to a 5-minute chart, it's going to look completely different because it's calculating a different aggregation period, right? Now, again, I want to keep this at a 4-hour chart because I kind of want to show you guys things from a larger perspective. And me personally, I do a lot more swing trades, meaning I'm looking at a larger time frame. But of course, if you're a day trader, you could still apply the characteristics, just obviously at a shorter time period, right? A different aggregation period that is much shorter. So going back to the 4-hour chart, I want to show you guys something, right? So the first thing I want to show you guys is the wider it is, the more just volume there is for that price level, right? And volume really is just the more hands are being transferred with the price of the stock, right? So there's a lot of buying, there's a lot of selling, there's just a lot of activity, right? So we see that around here, we see this is probably one of the highest points over here. There's a lot of volume in this price area at around $44. And if we kind of just go onto the chart, we see that, it kind of shows that the stock is going up and down, up and down, up and down, up and down at these areas. There's a lot of volume. Of course, we also have probably the highest part around here, which is around 41, 48. So around here, we see a lot of, just activity going on, right? And that red line, by the way, is the POC, right? It's not person of color. It's the point of control, right? And so that's generally where the most volume in terms of the price levels are taking place, right? And we see that, it kind of goes really high here, it dips down, and then it goes here. Now here, there's obviously more bars going wider, so that's why the point of control is over here, right? That's why the red line is over here. Now, you're going to see that, a lot of times when we see the point of control or where there's a lot of volume for that price level, that's really going to set kind of like a support and resistance, or actually more of a demand and supply zone, right? And I don't want to say support and resistance because the support and resistance is much more specific, where it's looking at like a specific price area. For example, let me just go ahead and delete this real quick. An example of a support would most likely be something like we could just draw a line over here, right? And this is really a sloppy support, right? Versus like a demand zone would be kind of like a more, not just a line on the chart, but maybe like a rectangle, where we may see just and let me go ahead and draw this out for you guys. We'll go ahead and draw like a little rectangle if we can. That would be more of a demand zone, right? Realistically, same concept, right? But I just kind of wanted to explain that for you guys. But I want to, kind of not get off tangent and kind of, show what we were talking about over here. So, we see that a lot of times when we go to these high levels of volume for the price levels, it's going to set a lot of kind of like the tone where the support and resistance is. And then as we go up, right, as we go higher up, there's less volume at these price levels, right? And even as we go further down, right? And so what's really important to note is that when there's low volume, right, that means that there's fewer shares trading. And fewer shares means less liquidity across, the overall price action around the market, right? So stock price volatility, it rises in low volume market, right? So if you're doing like trading huge blocks of stocks in a low volatility market, it can cause significant changes in the price of those stocks because there's not a lot of people, contributing to what the price level should be. And I hope I'm not losing anyone here, right? This video is kind of a little bit more intermediate, but kind of what I'm trying to say is that when there's a lot of people, right, there's a lot of people buying and selling, there's going to be a lot of volume. And so there's kind of like this conflict between people buying and selling, and that's why you have these support and resistance levels, these demand and supply zones mapped out. But as there is less volume, there's less people trading, right? If someone comes and makes a big purchase or they make a big sale, it's gonna have a lot more volatility simply just because they're kind of dictating, the direction of the market. If there's not a lot of people participating and someone's willing to put a bunch of money over here where there's not a lot of volume, that's like saying, hey, I think this is a good, reasonable price. This is where I'm going to go ahead and put a lot of money in here. And, because no one else is selling, saying this is a bad area, I'm going to sell, it, generally moves the price up. So now more people are coming in saying, hey, this is where the price is at. And so that's what happens when there's low volatility, right? So the way I look at kind of these volume profiles, right, and I don't use these often, but I do use it in conjunction with a few other indicators and, price action. But I look at, what's going on in a general area. What is the general support level, the, resistance level, demand level, supply level, whatever you want to kind of use. And then I also look at, the low levels of volume in the price action, right? Because if there's low levels, then that means that there's going to be high movements in that price action. And as someone who loves to swing trade, I like to try to purchase when there is a reversal in the price action. Now this is just my style, but when there's a reversal in the price action and there's low volatility, right? There's low volume. For example, around this area over here, we see that there's low volume. And it looks like a reversal. It looks like, if we wanted to draw a little trend line, the trend is going up and things are going up over here. So, I love purchasing or at these levels. And, if it was a reverse area, like at the top, then I would be shorting, right? Which is just the opposite of, buying, right? So, I want to show you guys a few examples. I know this may be a little complicated, but I want to show you guys, right now we're looking at Bank of America. Let's look at, a stock like Affirm, right? This is a stock that I made a few videos on this year. It was a stock that, I had my biggest day where I had, and I don't know what I clicked over here. It's ticker symbol AFRM, enter. And so, this is a stock where I actually had one of my biggest days. I did like $5,000 in one day. By far, in my trading experience, the largest day I had in one day. So, it's just a stock I covered on this channel. And something that you're going to see is that, over here, the POC, the point of control, that's where the most volume is, right, for these price levels. So we see that around $180, almost $108.95, right? There's a lot of volume. There's a lot of people buying. There's a lot of people selling. And so when you see that, you're going to see that there's kind of like this, it sets up like these areas of support and it sets up these areas of resistance. We're going to kind of just draw these areas. And again, I'm not drawing the best lines. These are kind of sloppy. But we're seeing there's a lot of volume here. Now, why would you, possibly want to trade when there's a lot of volume? Well, you're going to get better fills, right? It's not going to be harder to, enter into a position or exit into a position because there's just, there's people willing to buy what you're selling. There's people willing to sell what you want to buy, right? But notice, as I mentioned earlier, that when there's low volume, that's where the price action is the highest, right? So regardless, if you guys want to start at the top, we could possibly, for a firm, just kind of look at it from the bottom as we clearly see that there's less volume around here, right? So notice how when there's less volume in these price levels, if the direction of the stock is going down, it's having these big areas going down. There's not really a conflict of buying and selling where it's going up and down, up and down. Whereas you see kind of in these areas over here where there's a lot of volume, right? So, as we see when the stock is going up in an upward trend and there's low volume, we see these big moves. I mean, we see these, and I didn't mean to draw that line over here. I gotta get a different tool. So I can map this out. We see this is when a firm is doing 50% in the day. We see, for a firm doing 41%. And then, of course, we'd still had that happen around these areas over here. So, it is possible that there could be big movements when there's a lot of volume in a certain price level. But we see that more often when there's low volume. And then same thing on the reversal when, the downtrend is here. As we go to lower volume, we see these bigger moves down, right? So, for me, I would look for when a firm starts to maybe show hitting an area of support and resistance, or area of support and demand, where it starts reversing at these low volume areas, and that's possibly where I'm going to want to purchase, right? Again, that's just my strategy. Now, I want to also look at another ticker like Tesla, like TSLA. This is another stock that I covered a lot on this channel, and I hope you guys could forgive all the drawings I have on Tesla previously. This is something that I've traded a couple of times this year. But notice that Tesla has low volume around this price range over here, around from like 800 to almost 1,000, and that's where Tesla had the most biggest swings, because again, when there's low volume, right, there's less liquidity, there's less people bidding on buying and selling or taking place in the market, and so volatility is there. So we're going to see the biggest price movements there. And then when we go to where there's a lot of volume, where the point of control is that red line over here, and forgive me for the drawings, as I said, we see that the stock kind of moves more sideways, simply just because that's where a lot of people are contributing towards, making their buys, making their sales. So sets like these support and, resistance levels, demand and supply zones. And, that's pretty much what I see when I'm looking at the market profile, or I'm sorry, the volume profile, right? Now let's take a look at another ticker like Square. This is a stock that I haven't, oops, and I typed the wrong ticker one more time. It's SQ. I don't know why I'm typing this, but Square is a stock that it's actually been beaten down, but we can see that after you see that the point of control is over here where there's like a lot of volume, and that's generally where we have a lot of like kind of the sideways movement. We go up, we go down, we go up, we go down, but as the volume decreases, that's where the big movements the big movements for the stock is presented. And so we see obviously the volume is occurring at these lower price levels, and the stock is trending down. So we have this major swing going down. Now, I do short occasionally. I'm not a big fan of shorting, but I do. I occasionally buy puts. I occasionally short stocks. And we could see that if someone was to short around these areas, they would have made a nice gain. I mean, if we go from the low of 133.13 all the way to where the support was broken, that was around 41%. And so, it's just interesting to kind of note, the volume levels in these price levels. And of course, this changes when you're looking at different aggregation periods. Now, if we look at like, again, let's just say a 1 minute chart for our day traders. Now, obviously, we're going to see that the lower the volume is, again, still on the daily chart or the 1 minute chart for the day, we see that that's where a lot of the momentum is on the swing. And then as we approach where there's a lot of buying and selling, where there's a lot of volume, things move sideways. So hopefully you guys kind of understand what the market profile is. I know my textbook definition may have thrown you guys off, but by going over, like I believe we went over like 4 different ticker symbols, you can see how significant this is. And then it's much more significant when you price it in with not only just like the stock price action, but maybe use other indicators such as the linear regression channels, or maybe moving averages, right? Or of course, maybe you're using other indicators. So it's something that I definitely like to use to complete the puzzle of trading. It's not a guaranteed thing. At the end of the day, there's not a one method 100% is guaranteed all the time. And really the whole part of trading or actively trading or even investing in the market is really mitigating your risk, right? When it's trading, you're managing your position sizes and your entries and your exits. And then when you're long-term investing, you're trying to, enter in at slow paces, adding, maybe weekly, maybe monthly, depends on how often you invest. And then also you're trying to diversify to mitigate the risk. So, of course, with trading and investing, mitigating risk is, one of the most important aspects. But, this is definitely a tool that you can use in your arsenal of trading or investing for you to, make some nice trades or investments. With that being said, guys, hopefully this video didn't lose you guys. Make sure to hit that like button. And then before you guys go, I need you guys to watch this next video over here. And I'll see you guys on that next video. Take care.